It's a good start on expected lines, the gap up start for the Nifty and for benchmark indices. No large newsmakers, but there could be a marginal uptick which should be visible in some of the large cap banks, because that's where the meat in the market seems to be in terms of the price action. So Kotak, HDFC Bank, Axis Bank, they may just look interesting. Consumer tech and fintech stocks, given that Nasdaq is making new highs, they will have a psychological impact, which is Zomato, Policy Bazaar, PB Fintech. There's a new kid which went public from the IT space, IKS. It had a strong debut but came cracking down on Friday. It is off to a decent start. And then all those solar and all those, green companies, Anisha, hopefully they would be green for them.
Oh, well, yes, today Sterling Wilson Solar from that green universe is doing well on account of the large order that they've bagged. But separately, it's India Cement which is building on to gains. Yes, that CCI approval for Ultratech's acquisition has come, but I didn't expect that big a jump up on that stock, given the fact that there wasn't going to be a major worry in any case. But India Cement is flying high, 8% higher. JBM Auto also managed to bag a large order, so it's getting a thumbs up. Interestingly, Z Entertainment has opened in the green. You also have names like Techno Electric, Kalyan Jewelers, Avanti Feeds, which are holding in the green right now. What's on the back foot is GE Shipping. You also have Suven Pharma, which is on the back foot. Some of the insurance companies perhaps were expecting some sort of breather to come as far as GST is concerned. Not happening, and that's the reason New India Assurance, GIC, Star Health, Go Digit, these are the stocks which are in the red at this point of time, because the matter was deferred to a further date, so no really incremental news flow as such. Some of the metal stocks are reacting positively to that safeguard duty possibility. So JSW Steel is in focus. You also have a couple of other names which are doing well in the green. But overall, it's a bit more somber start than what we anticipated. Of course, metals is the leader because Tata Steel, Jindal Steel, Hindalco, SAIL, Vedanta, they're all in the green. You also have IT doing okay with persistent emphasis, Wipro doing okay. And actually, all sectors are in the green right now, Avan. So, broad recovery, but not to that extent that we were expecting.
Having said that, there's only like 2 or 3 stocks that are in the red on the frontline index. I think metals is definitely doing a lot of the heavy lifting, and then there's a smattering of IT, and of course heavyweights like L&T, Reliance Industries, all of that really helping the cause. But by the way, the broader end of the market is kind of neck to neck with the frontliners. We're not quite keeping up. So yes, in saying that the overall sentiment is not looking entirely positive, there's not a gung-ho start, that yes is evident. In fact, big drags include the likes of an Imami, you've got an Ajanta Pharma that's down in trade. I'm talking about what's happening within the broader universe. Take a look at a New India Assurance, but Suven Pharma is the one that's seeing a 6% gash down in trade. Dilip Bilkon, Prestige Estates, Ashoka Buildcon, KEC International and Siemens as well. That stock currently quoting at about 67.46. Those are some of the other drags in today's trading day. So that pretty much sums up the market open, and let's see what the rest of the day holds in store. For now, the breadth in favor of the gaining side. But meantime, as we're stepping closer to a brand new year, Sunil Tirumalai, the Executive Director, Head of EM in Asia Equity Strategy at UBS, spoke extensively on how he thinks the year 2025 is going to pan out for India, how Trump's tariffs and the China stimulus are going to affect the Indian markets. Listen in.
2025 will be, very uncertain, and that's generally not a good thing for markets. So I think if I take from a global perspective, and especially from an emerging markets or Asia perspective, there are many headwinds, right? So you have potentially a Trump administration that could impose tariffs on many parts of the world outside the US. You could see some tax cuts for US corporates. So from a relative perspective, it's so easy to just stay long US and take money out of rest of the world, right? So that is a very strong headwind. On the at the same time, valuations are not cheap. Valuations for not just for India, it's even at the EM level. You are at significantly high levels over a 10-year, 12-year periods, and you're probably heading into a situation where long-term yields will stay higher for longer. Corporate credit spreads in the US, because the economy is likely to kind of slow down. You will see spreads widening. So all of those are headwinds on valuations as well. So that's the overall global context. In within that, I think India is, screening quite expensive, and it feels a lot more expensive in the context of the weak earnings and the weakish macro that we are going through. So yeah, I mean, we actually have a downside for MSCI EM, for 2025. And
if you like this video, then like, share and subscribe to ET Now.